Good morning, everybody. Hello, this is David Wokes from the Advantage Group. Very much welcome to this presentation and webinar that we're doing with our partner, Gowling's. The topic today is a follow-on from our suite of events that we're going to be running. We're going to be joined by one of our partners and the experts from Gowling, who's going to be talking about home working and tax, a key area that we have to make sure that we get covered right now as we start to really change our whole approach to work and the whole return to work environment. Advantage Group, as you may well know, or you may well understand the Crone Corkhill brand more than the Advantage business itself, is part of the Recruit Group globally. We're involved with a number of different service offerings, and as you can see from the slide here, we have an extensive base of coverage in the UK, working through the three main service offerings that we have of Advantage Resourcing, which is our national recruitment consultancy business, which specialises in a number of different business areas. Advantage XPO, and we talk about a number of our managed service agreements and RPO programs that we provide, identifying on this slide Balfour Beatty and EasyJet for example, and then Crone Corkhill, which provides a very much a specialist service for EAs, PAs, secretarial, financial and professional services recruitment in the London area. If you could move that one on, Lucy. The core services that we provide are broken down into these four areas. So we're very much specialists in working with people to understand how we optimize the recruitment process, how we access the talent for you, and maybe identify how we can work with you to build your talent program to give you the best candidates using the various channels and the experience and expertise that we have. Today, we're going to be working around our consultancy services. That's very much around our new Secure Restart program. And we're going to be progressing that on into other areas, including legislative support for the forthcoming IR35, as well as working with businesses about how you develop your own brand and your own value proposition. And as a business, we're very much led by the drive to use innovation. Technology is transforming the recruitment market. So today, as I say, is all about our consultancy service and our partnership with Gowling's. So I'd very much like to introduce our partner now, who's going to be concentrating on, as I say, the home working and tax situation. So over to Zoe Fatchen, who will carry on with the rest of the presentation. Thank you.
David. So my name is Zoe Fatchen. I am a partner in the tax team at Gowling WLG, and we very often provide advice to employers, principally rather than employees, in relation to employment taxation, including information and advice about what sorts of expenses can be either reclaimed by the workers from their employer, or where tax relief is available in relation to certain expenses incurred in connection with home working. So today's webinar is focused solely on tax reliefs and reclaims for employees. We're not looking today at people who have a self-employed status for tax purposes. So this is really just your employees, and it's not relevant for anyone who provides consultancy services on a self-employed basis, or who is providing services through a personal service company, for example, under IR35. Those rules are different and are not within the scope of this webinar. So we have lots of questions that we've been asked in the last few months, as you can imagine, because we are in such a different circumstance and there are so many more people working from home than ever before. But the number of people working from home was already on the rise. So as we know, the Office of National Statistics published some information which said that between 1998 and 2014, so even up to 6 years ago, the number of individuals working from home increased from 2.9 to 4.2 million. And now, of course, that number is much, much higher. And as we know, anyone who's working from home may well incur additional costs in doing so, because a lot of the equipment and the services that would normally be provided in an office environment have to be provided from home instead. And in some cases, the individuals will incur those costs directly. And in other cases, the employer will either provide the equipment or will reimburse the cost incurred by the employees in providing or in sourcing that equipment for their own use. So we need to look at the different ways of incurring those expenses and also the different ways of covering them off, reimbursing them, getting tax relief in relation to them. So there's a wide range of different expenses that can be incurred in connection with home working. Typically, we think about office expenses. That would be things like equipment. So that could be IT equipment, for example, if you have a workforce who are using laptops but who might need fixed screens or who might need more convenient keyboards for use if they're using them every day and not just occasionally. Equipment might mean desks and chairs, even basic equipment. It could mean printer cartridges, it could mean stationery. Services would be things like utility bills, which might be increased because someone is working from home. There could be additional services provided by the employer to the employee, and then supplies is really the office supplies. So the first criterion that we always look at is use for a business purpose. So it will only ever be possible for an employer to provide equipment, services or supplies to an employee for their use without incurring a tax charge if those goods are being used and services are being used for business purposes, or if any element of personal use is really insignificant. And that test applies in slightly different ways to different types of equipment, services and supplies, because over the years the rules have evolved differently in relation to different items. And so as we go through this webinar, we will look at some of those specific cases and see how those apply. So the criteria include the reasons for the need to work from home, either, for example, because the equipment that they need isn't readily available in the office, or because their work means they have to live too far away from their workplace to travel there every single day. So there's a reason why they are obliged to work from home. Of course, looking at the situation we're in at the moment, COVID-19 is a very good reason why individuals might need to work from home rather than travelling into the office, particularly if public transport needs to be used, and where that work can be done safely and properly from home in line with the government guidelines that are in place. So looking at the amount of expenditure to be incurred, then we are looking at the amount that's not more than the additional household expenses. So simply running a house or running a flat will involve the incurring of expenses which are required just to keep it running. So what we're looking at here is the potential for reclaiming the tax in connection with the extra which is incurred as a result of this additional working from home. Now, as you can imagine, it can be quite difficult to identify what that excess amount is. So the revenue have established a weekly limit, which is a basic amount which can usually be recovered as a result of additional home working. It is possible to claim amounts over and above that weekly limit. We'll come on to that in a minute. So if the amount being claimed is not more than the current weekly limit, then that means you have minimal requirements to show the additional expenditure, minimal requirements to document it. You don't really need to prove the additional expenditure has been incurred. Okay, can we move on to the next slide? Thank you, great. So if someone is obliged to work from home, whether that's due to COVID-19 or not, the employer can choose to pay up to £6 a week or £26 per month for individuals who are paid monthly. So if you have employees who receive their wages weekly, then up to £6 a week can be taken into account. And then if they're paid monthly, £26 a month would be the relevant sum. Previously, that was less generous. So in the previous tax year, it was only £4 a week or £18 a month. And that, of course, reflects the inflation in costs that we see. So this only applies where someone is obliged to work from home, if they choose to work from home on a voluntary basis, and home isn't their primary workplace, there's no reimbursement. If someone has a long-term working from home arrangement with the employer, then in those cases it can also be possible to reclaim the weekly limit. Now, that weekly limit applies to additional expenses generally, and they're the kinds of expenses that you would expect to incur on a monthly basis. So that can include things like additional cost of electricity, additional cost of gas, for example, if someone is home during the day and then needs to heat their home during the day in a way that they wouldn't normally need to if they were in the office, because there wouldn't be anyone there in the house. It can cover metered water. So if someone is on a water meter and is paying according to usage, then it can cover that. What it can't cover is any kind of flat rate charges. So you can't use this towards council tax, because of that's payable anyway. It can't be used towards water rates, which are a standard monthly rate either. Okay, next slide, please. Okay, so the reimbursement is not allowed for costs which are attributable to things which are used for mixed purposes, so for both private and business use. And there are some things in the home which are expenses that you can see very clearly would be used both for business purposes and significantly for private purposes. That might include, for example, the rent, the mortgage, the kind of flat rate charges that I've already described, water rates, council tax, that kind of thing. But also, interestingly, internet broadband connections, particularly in these days of streaming media for entertainment. The revenue take the view that broadband in a home is going to be for mixed personal and business use, and not for business use only, and so therefore they won't typically cover broadband costs as part of the allowable expenses on which tax relief can be claimed. Okay, next slide, please. Thank you. So as well as incurring extra costs on utility bills and things like that, employees may have to buy additional equipment in order to carry out the work. Now, some employers have been loaning equipment to employees, so providing it to them on a temporary basis. And that might include, for example, taking home your office chair for the duration of COVID-19 lockdown or the working from home period, as lockdown becomes eased in certain respects, but home working is still encouraged. So it could be office chair, it could again be monitors and computer equipment which are borrowed from the office and which will then be returned again to the office when normal work resumes. So that kind of equipment doesn't incur any kind of cost for the individual, also doesn't incur any kind of tax charge for either the employer or the employee, because very clearly that kind of equipment is being used for business purposes. The ownership of that equipment is not passing to the individual employees. So that's all very straightforward as far as the tax treatment is concerned. Where equipment isn't provided by the employer, it may be that the individual is paying for that equipment out of their own resources, and then either the employer will reimburse the cost of that or they won't. If they do not reimburse the cost, and so the individual is paying for that out of their own pocket, then they will be able to reclaim that cost under their own personal tax return at the end of the tax year. And you have to look at the annual investment allowance, and that is deducted from typically income and gains before tax in the personal tax return. Of course, that doesn't help anyone as far as immediate cash flow is concerned, because it's a tax return adjustment rather than immediate reimbursement. So wherever possible, very many employers are reimbursing that cost under an expenses policy in the short term. The good news about the annual investment allowance, however, is it is very generous. It's been going up year on year, and for the current tax year, it's £1 million. Now that sounds like a lot of money, and so you think, well, I can buy a lot for that, but beware, because the kind of equipment that qualifies within that limit is quite closely defined. It has to be equipment which is clearly for business use only and which won't be used for any significant personal use as well. So just because there's that £1 million limit, don't assume that it's generous in other respects. The reason that limit is so high is that that allowance is also available to people who are setting up a brand new business themselves for the first year, and may have to, for example, fit out a restaurant or a hotel or a shop or a factory. So that's really aimed at equipment, perhaps manufacturing equipment, maybe expensive vehicles, things that need to be bought in the first year in order to set up a business. So that £1 million allowance was never established with the idea of people working from home in mind. It's simply the right box to put your claims in if you have home working expenses which qualify for the tax relief, but which the employer is not reimbursing. Okay, let's move on to the next slide. Thank you. So as I've said, the AIA is claimed in the tax return. Be careful though, because if, for example, you were to buy an all singing, all dancing home computer, setup, laptop, printer and everything else, use it for 6 months to a year, and then at the end of that year find that you're going back to normal working practices, and you no longer need a setup like that because you're back working in the office full time, and decide to sell it for whatever reason, anything that you receive by way of proceeds when you sell that item needs to be taken into account in the following tax return, and so there can be an adjustment, because that investment allowance is for the actual expense that you incur in relation to the item, bearing in mind the price you acquire it for and anything you receive if you were to sell it at the end of the period. So that's like capital allowances of other types that you might be familiar with in an office environment towards the purchase of plant and machinery for office purposes, for example. So that's called a balancing payment. So the annual investment allowance doesn't apply to cars, which of course have their own tax regime. It doesn't apply to any assets which the individuals might already own but have used for personal purposes before, but are now using for business purposes. So let's say someone had a study with a desk and a chair and a home computer in it, which previously they simply used weekends, evenings in their spare time for personal purposes. If they suddenly find themselves using those items for business purposes instead of private purposes, you can't apply the annual investment allowance to those, because the items were not bought specifically for business use. And of course it can't apply to gifts, because in relation to a gift you're not actually incurring any expense because the item has been given to the individual. Okay, let's move on. So mobile phones, again, mobile phones, there are some quite complex and involved rules around, and that is because of various tax avoidance schemes that were put in place historically when mobile phones were first introduced and first became popular. Now, when we think about mobile phones and expenses for business purposes, we're really thinking about the cost of providing the device and the cost of calls. But of course, these days, so many people have smartphones which can do all manner of other things. The guidance says that a smartphone is still a mobile phone for this purpose, and the fact that it can have lots of apps on it which do other things is not really relevant to the tax treatment, unless the doing of those other things means that you have data charges which are referable specifically to private use on a pay-as-you-go basis. So what do the rules say in relation to mobile phones? Well, the basic rule is that an employer can provide one mobile phone or one SIM card for each employee for their use for business purposes without any income tax or national insurance contributions arising. And the reason that they say one mobile phone only is because previously the rules didn't specify one mobile phone, and there were all sorts of providers, tax boutiques out there marketing arrangements whereby an employee could enter into salary sacrifice and they could receive in return a number of different handsets which could be used by different members of the family. And clearly there we're not talking about wholly and exclusively, or even necessarily in the majority, business purposes. So there isn't tax relief for the provision of mobile phones to family members or anyone else. And they also would say you can only speak on one mobile phone at a time. So one mobile phone is enough. If they do provide any additional telephones to one individual, then that additional phone will lead to a tax charge for the individual on a valuation basis, as if they've given the individual any other kind of asset. So if they give it to them outright, then they'd be taxed on the value of the phone that they have received. And then if it's leased to them, you look at leasing values and that sort of thing. We're not going to get into that in any detail today. In order to be able to provide a mobile phone without the income tax and NIC cost, it's really important to make sure that the employer is entering into the contract with the mobile phone supplier or provider of the network, whoever it might be. The contract mustn't be between the employee and the supplier. If the contract is between the employee and the supplier, the rules work in a very different way. Again, going back to those tax avoidance type arrangements, for those historic reasons, if you are dealing with the cost of providing the mobile phone by way of salary sacrifice, then that needs to be reported on the P11D for that individual. If the employee arranges for the phone to be provided, then again, you have to look at the way in which that provision works, the way the contracts work, the way it's all set up, because in some circumstances, it's possible that there might be a Class 1 national insurance charge payable in connection with the provision of that service, because they would say this isn't an employer phone which is being supplied to the individual, it's an individual's phone which the employer is paying for. Is different contractually and it's different conceptually. Okay, let's move on. So we have the mobile phone now, and we've worked out whether or not there's tax payable in connection with the provision of the handset. What happens to the line rental and the payment for calls? Well, if the employer is providing a phone which is on a contract basis and you have a fixed sum per month with either unlimited data or some sort of data limit, and then calls included in the package, then typically that package can be provided without a tax charge arising, as long as it's within the set limits. If the employer is reimbursing business calls which are in excess of the monthly contract limit, so let's say someone has 200 minutes a month on a fixed contract, and then they actually spend 250 minutes in that month on that phone, then of course there'll be additional charges payable for the extra 50 minutes. If those extra 50 minutes are business calls, then the employer can cover that cost without there being any charges to pay. Similarly, if the individual owns the phone and they incur business calls on a pay-as-you-go basis, on a pay-as-you-go SIM, for example, and then the employer covers the cost of those business calls, that's fine. Still has to be reported on the P11D as a benefit, but it's not a taxable benefit. What happens if someone spends time on their work supplied mobile phone and they engage in private calls and they go over the limit? Well, clearly, if the employer is reimbursing the individual for the cost of private telephone calls, then that is a fully taxable benefit. Income tax and Class 1 NIC will apply. But if they haven't spent up to their monthly limit, then there's no tax on private calls within that monthly tariff. Okay, let's move on. I think that's enough about mobile phones for now. So there are some general rules in relation to the provision of assets services. We are looking at the reimbursement of actual reasonable business expenses, and those expenses can be over and above the flat rate limit that we described earlier. So it could be over and above the £6 a week. If it's above that £6 a week, £26 a month, then you will need to have good evidence to show that those have been properly incurred and incurred in relation to business use. And because of that, because of the difficulties of evidencing that and how cumbersome that can be, particularly for employers with a large number of employees to deal with, typically an employer will say, as a matter of policy, we will reimburse you up to the flat rate. And then it's for those individuals, if they've incurred significant additional costs, to then go to the revenue, fill in their tax returns and reclaim the additional expenditure themselves. So you can have that approved general limit that we've been discussing. In some cases, a flat rate can be agreed specifically with HMRC on a business by business basis. That typically depends on the nature of the work, the nature of the role, and the kinds of expenses that you might expect to be incurred in connection with that. So, for example, someone who is doing a lot of CAD design work, who perhaps needs a more sophisticated IT setup at home, might be able to reclaim additional expenses. And if you operate a business which has a lot of employees in that category, you may well be able to agree with HMRC a somewhat enhanced rate, taking that into account, and then that will apply in respect of all of your employees. Okay, next slide, please. Okay, so mileage and the use of personal cars. This is one of the most common areas on which we receive questions. And of course, the first and most basic rule in relation to mileage is you can't claim tax relief and you can't claim mileage expenses in relation to normal commuting. So normal commuting from home to the usual place of work. Now, although it has been a good few months now since lockdown began, it might start to feel as though for many people home is their new normal place of work. Of course, for tax purposes, the revenue are not likely to say that that means that their place of work has permanently moved to the home address. They would say that that is an emergency measure, and therefore their normal place of work will continue to be wherever they were working before the COVID scenario really began. Depending on how long this carries on, it will be interesting to see whether that changes. But certainly for now, if you have someone who has been working from home the entire duration of lockdown, and they feel as though home has become their normal place of work, and then suddenly they're going into the office for a day or two, that doesn't mean that suddenly they can claim mileage for getting from home to the office as being an exception, because that would still be regarded as normal commuting for tax purposes. So no mileage for normal commuting, no mileage expenses for commuting from home to a usual place of work. And of course, under the well-established rules, an individual might have more than one usual place of work, depending on how they tend to operate. So there is some variation in the mileage expenses that can be claimed, depending on the nature of the vehicle. So typically, you would see the expenses claim being up to 45 pence per mile for a car. And then that applies for the first 10,000 miles. And after 10,000 miles, it's 25 pence a mile. For motorcycles, it's a flat rate of 24 pence a mile. And for bicycles, that would be 20 pence a mile. So it does vary depending on the mode of transport, and it also varies depending on how far the individual has travelled. And again, mileage expense reimbursements go on Form P11D. We're sometimes asked what happens if an employer's mileage expenses policy is less generous than the 45 pence a mile paid by the revenue. What happens if, in order to avoid having to benchmark where that 10,000 miles comes in, an employer says, we'll only pay you £25 per mile, regardless of how many you've done in that year? Well, in that case, the employee can reclaim the difference from the revenue. And in most cases, they would do that again through their tax return, so having to wait until after the end of the tax year before they put in that claim, and then get the benefit for tax purposes of what they have spent. And that is known specifically as mileage allowance relief on the difference. So they would need to enter into their tax return how many miles they've done. They'd need to know how much they had been reimbursed already by their employer, and then make a claim for the difference. There is an optional reporting scheme, so the mileage allowance relief optional reporting scheme, MAROS, which employers can join to allow employees to claim the difference. Some employers find that useful, others don't, and prefer to leave it up to the employees to claim themselves. So if MAROS is something that you run or something you're interested in, that's something you can look at separately and in more detail. Okay, what's the next slide, please? Okay, so as I said, employers' policies do vary quite considerably, and employers' policies in relation to items that they supply, particularly in context of COVID, may well vary. So if items have been bought by an individual and paid for by the employer on expenses, depending on what the employer's policy is, they may ask that the individual returns those items to the employer at the end of the COVID period, or at some later date, or when the individual leaves their employment, for example. And if they do that, of course, the ownership of the item won't move to the employee at any time. They're simply being loaned those items for business use. And if they're being loaned them and then they're giving them back, again, you wouldn't necessarily expect there to be tax charges arising, although it's useful to be careful about that and check those rules out in individual cases, because, as I say, this is just a description of the general rules, and there are bound to be exceptions and special cases arising. If items are provided by the employer and they want them back, in most cases the employer will pay for the postage, and that should be fine as a business expense. Or if the individual pays the postage, the employer may well reimburse those costs, or if the employee incurs the costs of posting them back, sending them back, they may well be able to claim those costs in their personal tax returns. Again, they need to look into that in specific cases. If the items aren't returned to the employer, if they're not taken back at the end of the period, and instead they become the property of the individuals without the individual having to buy them, so they are acquired either as a gift or for a value which is much less than their residual market value, then there's likely to be taxation on the residual value at the time when that gift or transfer of ownership happens, because what you have then is an employee who is acquiring an asset which might otherwise be a benefit. And again, in the individual's personal tax return, if they are then only going to use those items for business purposes, you would expect that relief should be available for that tax. Okay. And that might well be a capital allowances claim where someone has incurred actual expenditure on something at the end of a period, albeit at a fairly low sum, which they're going to use on an ongoing basis for business purposes. So as you can see, lots of different types of expenditure that might be incurred by employees, and that expenditure can arise in a number of different ways, either direct provision of the goods and services by the employer, or the employee pays for it out of their own resources, or the employee pays for it and then is reimbursed by the employer. We've been through a number of different categories and seen that those are taxed in different ways. But overall, the most valuable ones to look at are the home working office expenses, because we've seen those arise much more over COVID-19 than ever before. And then thinking about mobile phones, particularly if staff are using mobile phones for business calls much more than they ever have been before, or if new mobile phone contracts are being entered into specifically to provide employees with phones or other equipment specifically to deal with COVID-19 and to keep businesses running smoothly as we go forward. So I think that brings us to the end of our slides for today, and I'll pass back over to David. Thank you.
Thank you, Zoe. That's very informative. I think it's fair to say we all know it's going to be a complex marketplace and very different arena for all of us. So it's useful to get that information and to understand it, I think, in layman's terms, really, as you put that forward. Just for everybody's information, we will be able to share the slides that Zoe has used there. If you're interested in that, there will be further contact details, either directly to Zoe or to ourselves as Advantage Group. So please email in and we will be able to share those slides. We will also be putting a disclaimer on there for our partners, Gowling, just obviously to advise that any specific tax advice that you will need or would be looking for, you are better, or we recommend really that you do work with your own tax advisor to make sure that that is provided. So I just want to finish off now. I've got a couple of slides on the Advantage Group and what we're doing. So as part of the whole COVID situation, we've developed our own program, which is called Secure Restart. There's a number of facets to the program, as you can see from the slide here, very much around how ready is your business. And obviously we're a long way down that path nowadays in terms of what's safe and what's effective for getting people back into the workplace, but a lot of people still needing some further information. And so what we've developed is our own support mechanism around Secure Restart, touching on the factors that are on the right hand side of that slide there of how we can support you. And you will be able to access the Advantage Resource Hub via our website. There's a number of different activities that we can support you with, give you some information, direct you to other partners that we have, whether it's from the legal point of view with people like Gowling or other businesses that will be useful to you as you start to get employees back into the work environment. One particular factor that we've got, Lucy, if you just click onto the next slide for me, please, is the optics option that we have recently developed as part of Secure Restart. The Advantage Optics is the opportunity. It's a free activity at this point where you can contact us via this email address or via the Crone Corkhill team directly if you're already engaged with them. The idea being that we can provide you with information and insight into your business, the talent and the recruitment activities that you may well now be experiencing. And the insight will give you a number of different factors which you might find useful regarding the sector that you're in, the local region that you're in even, as well as the business marketplace. And this will hopefully help as you're starting to look at what you need to do, both for re-engagement and engagement of new people into your business as things change. And as we can see from what Zoe has presented, it's going to be a very different working environment. So if you do have any other questions generally or regarding the tax situation that Zoe has produced and you want the presentation, please email in to ourselves at the solutions email address shown. If not, we will look forward to hopefully having you involved in any of the future events that we'll be putting on. I think we're going to have a short break over the coming weeks with the remainder of the summer holiday period, but we'll certainly be looking to follow this feature into new events and new activities over the coming weeks. So thank you very much to Zoe and to the Gowling team for pushing this forward and giving us the information in the topic. and we look forward to speaking to you all again very soon. Thank you.